Martin from Secrets, the channel for learning about trading and investing. Welcome to Markets Tomorrow, the daily market analysis show where we look at what happened in the Indian stock markets and how we can plan for a better trade for the next day. So we had a gap down on the global CUES following the Fed commentary on the Jackson Hole event, and market crashed. So is it a consolidation that's going to happen, or is it going to be a bear market ahead? Let's look at the charts and try to find the answer. So this is analysis that's for Tuesday, tomorrow, August 30th, and 31st is the last day of the month, August. So quickly get into and see the charts. What do they say? So this is what happened, right? So this is what happened. It formed a gap resistance now. It gapped down and managed to climb up from the support zone, which is the previous swing low. The 20 DMA is lost. So gap down, which makes the upward journey even more. Correction has extended. Same, Banknifty also. It took the support before the previous swing high here. Another swing high is there here. It took the support zone. So it was not that bearish compared to the Nifty. Nifty was even more harsh bearish today. But it lost the 22 moving average. Right? It also created a gap down, so that gap will act as a resistance now. Correction has extended to nearly 4.5%. Right? So remember, we had 23% on Banknifty and nearly 18.5% on Nifty rally that had happened, and now 4% kind of correction has happened, which is not that bad as long as we are able to consolidate like what the Bollinger Bands indicates, and then take some more time on digesting the global scenarios and then move up. Then should be. But if it does not do that and crashes peak and falls down, then we have a new swing low, which is less likely to happen given that our markets and our currency is performing much better than several other global several other countries. If you see the markets of several other countries. So let's get into this details, right? 1.4% down, 1.8% down in Banknifty. So we had a bounce. We saw that it was a 1% recovery that happened after it took the support of the previous swing low. That has lost DMA, 20 DMA, and trend line breakout. We have the confirmation that it's not going to happen, right? At least for some period of time. So it is closed inside there and further falling down inside it. So the trigger, of course, everyone knows that it's a hawkish commentary by the Fed Chair Jackson Hole Symposium, right? And US markets reacted to 4 to 5%. Compared to that, we fall only less than 2%, right? Even our banking index is 1.8 only. So we didn't react that bad, if you see, unless and until this reaction extends. So total correction is only 4.5, as we have seen already. Now the next level watch is 75.20. On the resistance, the first resistance that's going to be, there's a gap that is created as today. 725 above that, 17.75. Similarly, Banknifty is 38.850 gap resistance, and then 39.750 previous swing high. Similar downside supports will be 17.161, which is a support gap, which is not breached yet, and 69.88. 948, which is also not a previous swing low, is also a gap support. And similarly, Banknifty 37.950 support previous swing low, and then 37.250 support previous swing low. Right. So we're talking about this zone, which is the confluence of the 200 DMA and the gap. So the Banknifty, this gap is the confluence of the 200 DMA, this is the brown line, and then the swing low also. So if that is breached, 7,000 is breached on Banknifty, and so 16,950 is breached, then we may have, the bulls may have some real worries to begin. Until then should be fine. So momentum is lost, obviously there's a big fall. Momentum was managing the bullish zones till previously. Now it has flipped into the sideways, both Nifty and the Banknifty, and the divergence is nullified, negated, you can say. No longer valid, it didn't work out. Trend indicator also, we had seen there was a U-turn bend and then reversal happened and it has crossed over the bear zones on the short term. We're talking about short term both. Right? So both momentum and trend is in the sideways and not in the bear zones, right? But slipped from the bullish zones to the sideways zone. So VIX is 19.292, very close to bearishness. It spiked 9%, very close to 20. That's what I meant. So above 20, it will be very difficult to trade for instruments like derivatives. Futures OI, actually that was not checked. Yeah, it was checked. Yeah. So she should not build up that happen, definitely, no doubt about that. Opens OI showing that 1,000 point range for the weekly expiry on September 4th. 17,002. It's a truncated week. There is already that's coming. So still a very wide range for this Thursday's expiry weekly. 38,000 and 39,500 is the Banknifty's range. Not too bad of ratio 0.80 and 0.72. Nifty seems to be more stronger. So when it comes to the put-call ratio for the weekly expiry. So that's where the option. So I overall sideways movement. No definite bearish indications are there as of now, right? But overall the put call ratio is not bullish, that's for sure. And OI levels are wide range, and is because the anticipation is that it can go and touch till 70,000. And even now a spike up also is expected by the call writers. Sectoral watch, if you see IT, metal, reality, they were performing earlier, all of them underperformed. IG's worst hit 3.5% because Nasdaq fall, so it obviously was weak anyway. So one more hit on a sector that has already hit and corrected substantially. Right, 30% of correction has happened in almost all the IT stocks, so it is even more hit because of the US market corrections. So FMCG, metal are the only two sectors now maintaining the bullishness in the short term now. Heavyweights, none of them performed. Nifty and TCS were badly beaten down to the bear zones momentum. ICICI Bank is the only one that was managing to stay, but that also lost the momentum in the sideways. Don't know whether it will catch up or not, but that's the only stock that is showing some momentum at least in the closer to the bullishness. 5 years FI turns sellers again, 561 crores sell today, and DAs are small buyers, 144 crores in the cash. Not good news, right? But no big selling has happened from either side. Crude is rising, dollar is rising, it's not great. Rupees weakest levels, all-time lows. Dollar is 20-year all-time high levels, right? So both crude rising and dollar rising is troublesome for the any economy. So it would impact on markets obviously. Gold is kind of rising, but in the sideways momentum. SGX is flat, red. US indices are red once again. If you look at the futures, so we'll have to check these both indices tomorrow morning and how they end up end of the day. So there's again another big down move or big up move, then accordingly our markets also will react. That's for sure. If it's a small consolidation kind of move, nothing will happen. We'll take the local cues and not the global cues. Major event is already over, the Jackson Hole event, so there are some more events that data that may be coming out from the US indices in the coming days. So market may be reacting to that. So it's a triangulated week, August 31st is the holiday. So expiry is coming on Thursday, right? So anyway, we'll have to keep close watch on the global cues, and then the VIX, that's the thing that we can do. The VIX has spiked up very close to 20, so price action. So overall, just two picks, both on the short side, right? And emphasis is IT stock, mid cap stock. 7:30. Short is because its momentum is down in the bear zones and trend is down and price patterns are bearish. Alchem Labs, that is also showing bearishness. Let's quickly check this, why they were picked as short candidates, right? Alchem Labs says, see this, it's in bear zones momentum, both weekly and monthly. It's in a trend line channel, a lot of space to go down, so definitely you'll get good swing opportunities. Trend and momentum both are in the negatives. What else you have is emphasis. The names are complicated, yeah. So IT stock, IT sector itself is slowing down. It has done a gap down today. It's a bear zones. Weekly also it's bearish. Price pattern, momentum, trend, everything is bearish. So maybe giving a good swing opportunities. All the supports are there close by. You'll have to trail and put tight stops. But the gap would act as a resistance on the upside. So you can expect that it can be for the move if the US market also is falling, right? Just to wrap up, the view for the next day is mild bearishness continues. Not heavy bearishness, mild bearishness, because a lot of supports. It's at a support zone. There's a chance that it can consolidate, and it's at a support zone basically. Previous swing low support it is taken, so it can have a CAP, changeable variety bounce can happen anytime. Momentum slip to the sideways, that's bad. 20 average is gone. FIs has turned to be sellers. Trend line channel breakout is not going to happen. Momentum trend, both of them has turned, so everything is bearish as of now. Correction. The only thing is, look at the bounce that has happened. It's not a dead cat bounce, it is a decent bounce that has happened. Nifty managed to recover 1% up. That's the power of the market. So the correction is now extended to 4%, but that's also not that bad. After a continuous rally of 18%, this is fair enough as of now. Now from here on, would it break? Would it break that cap support and 200 EMA confluence area of 16,957 to 17,000 and so on? Would it do that? If that does that, then we are worried. Would it continue to consolidate for some more time before taking out for a move upside or not? That will indicate whether 7,500 will get closed, will get conquered this week or not. If that does not happen, it's less likely. It may be downfall. And if it is downfall, how? Well, and if 200 EMA, 100 EMA and 50 EMA is gone, it can go to previous swing low level also. It is less likely considering the strength of our markets and the bounces that we have from the low level. The way our currency is performing, the way as compared to other countries and other economies, our country is doing good and our market is very resilient. In spite of all this, when US market is correcting for 1.5%, 5%, we are only correcting 1%. So that's a strength in the market. So we may correct, but it may not go down to make a new swing is what we have to anticipate. But yeah, it all depends. All that we can do is we cannot predict the market. We can only look at the probable zones where it is supposed to slow down, take a support, or probably probable areas where it will face resistance to move up. These are only the support and resistance is all based on probabilities, and probabilities all that we can think of accordingly. Do the risk management and play. That's the only thing that as traders and investors that we can do. Right? So, hope this helps you to frame your market view for the next day, and if that helps you in some way, consider hitting the like button and share it with your friends. Subscribe if you're not subscribed. Put in your comments and feedback so that I can improve and also get motivated as well. Thanks for watching. Happy trading, happy learning, happy investing. Bye.